Hello, good afternoon. You're watching Market Fatafat on ET. Now, I'm Vinny Motiwala. Shell D'Souza will be joining in shortly. But looking at the markets as of now, where are they headed? 24,940 levels is what the market is at. So, seems like, recovered comfortably from the day's lowest point. Then we've been roaming in that 24,900 range. Keeping an eye out on that, almost near the day's highest point is what the Nifty is trading at. What's doing well in terms of sectors? We have the Nifty Pharma that's holding on to gains. So Granules, Gland Pharma, Sun Pharma. Let's pull all of those charts up. The pharma names surely are buzzing away in trade. Granules especially coming in on the top list of even the F&O players, and it's among the top gainers there. We have Tata Communication, Jubilant Foodwork among other top gainers in the F&O world. And a lot of losers also coming in today, especially on the back of earnings moves that we're seeing coming in. India Mart Intermesh, Industars, Birlasoft just reported its numbers. You could see it flashing at the bottom of your screen as well. That Birlasoft in terms of margins is seeing a bit of a weakness coming in. And we've seen that fall coming in the stock price. They reported the numbers just a short while ago. Nilkamal too, one of the stock moving in trade on the back of its numbers as of now. But yes, that's how the market is looking like as of now. What we're seeing coming in is that recovering from the day's lowest point, the Nifty, mid and small cap managing to outperform a bit in terms of the markets, but a lot of stock moves coming in, especially on the back of earnings and technicals. So let's get started with that, and let's bring on board Sneha Seth on the technicals. While from the research team, we do have Ankita joining in with us as well. So yes, good afternoon to both of you all. And the first stock that I will be talking about today is GAIL. This is a stock in focus on the back of its numbers. Now, overall, when you're looking at it in terms of the numbers, it has been a strong set of numbers that the company has reported during the quarter gone by. We saw the stock up as much as 5% today intraday. Macquarie said that they maintained the underperform rating, but there was a beat that largely was driven by the higher gas marketing margins. Sustainability of the same is some concern that they are watching out for. But what came in the con call of the company was very interesting because they increased their marketing segment guidance. They expect the marketing EBITDA to be a minimum of 4,500 crores. Previously, that's spoken about a target of 4,000 to 4,500 crores. Now, minimum 4,500 crores. So, moving to the upper side and upper end of that target as well. And this is for FY25 is what they're expecting this EBITDA to be, marketing segment EBITDA to be at 4,500 crores. Power demand is quite strong for the company, and they could furthermore, one could watch out for a revision coming in terms of the numbers, post Q2 numbers, an upward revision there as well. So GAIL India surely in focus today, up 2% as of now and managing to hold on to good gains there.
Alright, so that's GAIL India, all eyes on that particular account. Good afternoon to all of our viewers, Vinny, Ankita, as well as to Sneha. And Sneha, coming right back to you, Jubilant Foodworks. How is this one looking on the charts to you? Because at least if you look at the numbers that came out from Sapphire Foods, it was not that exciting. There you go, you have Vinny also nodding the head on back of that. But how is Jubilant Food looking to you on the charts?
If you look at the chart structure, we have given this counter has given a very strong comeback. Like if you see there is a strong base formation around 430, 440 odd zone, and after that we have also seen this counter surpassing the resistance zone placed around 587, 589 odd zone. So looking at the overall chart structure, I believe this resistance should be acting as a support now. So with a strict stop loss of 587, it's a buy for me. Upside potential target can be around 620 to 625.
Surely that's the word coming in on Jubilant Food. Keep an eye out on those levels over there for Jubilant Food. But let's move on, talk about Torrent Power. Surely powered up in trade, Ankita, today after its numbers. What were the intervals looking like?
Absolutely. Torrent Power is soaring away 17% in trade today. In fact, it hit a fresh record high. There you go on the chart, 17%. Good set of results coming in for Torrent Power. If you see, the revenues are up 23% on a year-on-year basis. The PAT has come in at 972 crores versus 517 crores on a year-on-year basis, up 88%. The margins are also seeing an uptick of 440 basis points, and the EBITDA has come in at seeing an uptick of 56%. Now, Torrent Power's board has also approved the sale of 100% equity shares of Torrent Electrical Private Limited to Torrent Investment Private Limited, which is the holding company, for 85 crore rupees. And the expected date of completion of the sale is 31st December 2024. So that's a little news piece coming in there as well. But a strong set of results coming in for Torrent Power, and we can see the stock up in a way as 17% in trade.
All right, so that is all about Torrent Power then. Sneha, coming to you, Adani Ports, how is this one looking at the charts to you? Because this is one counter where you have a lot of analysts who said is among the strongest in the Adani group of counters.
Yes, it is. If you look at the overall chart structure, it is quite strong after surpassing the resistance zone placed around 980. This counter has, continuously been showing strength. Uh, it is trading above 20 demo on the daily chart, which is said to be very positive. Looking at the overall chart structure for last 2 weeks, especially, I think we may head at least towards the recent high, which was around 1620, 1640 level, is also possible in this counter. So if someone wants to go ahead and long this counter, I think one can go ahead and keep a strict stop loss of 1537 and expect a target at least towards 1620.
Okay, that is Adani Ports. Keep an eye out on those levels of 1620 side is what Sneha is saying. But, a lot of cyber security issues have been cropping up in the recent time. My colleague Ajay Sharma actually caught up with Vishal Salvi, who is the Chief Executive Officer at Quick Heal Technologies, to talk about numbers and more in terms of what the sector is doing as well. Listen in to the conversation.
See, I think what's happening is that, today we live in a world where we're hyper digitized, right? Where digital adoption is there in every walks of life and businesses. And you've seen an example of how it can disrupt the day-to-day work and operations of the globe with a small, bad update that happened just last week, and it crippled with more than 8.5 million devices going offline. Now, of course, this was a more of an error rather than a cyber attack, but it could have very well been that. So today, I think, protecting and making this digital world safe and trustworthy is very, very important. And cybersecurity is a bedrock or the foundation of making sure that, we continue to make sure that as we add more and more digital in our lives, there is a sense of stability and security in that.
Okay, let's come to the company now. The quarter was a profitable one, but what are the steps you're taking to, for meaningful improvement in profits and growth as far as your company is concerned? Can you talk to us a little more about the strategic areas of focus from your side?
Yeah, so basically, we want to be a global cybersecurity player from India. I mean, that's our aspiration. We are deeply focused on innovation, simplification, and doing our job, which is securing the enterprises. We have a past record of 3 decades of innovation and being relevant to our customers within India and overseas as well. And we have now pivoted to enterprise security, which is really how we are able to protect the digital foundation of organizations. So clearly, our ambition is to make sure that we grow on our enterprise side. We will continue to add more and more solutions which are adjacent to the overall business model that we have, and there is obviously a huge potential purely from a market point of view, because there is a huge amount of opportunity in terms of how organizations want their digital infrastructure to be protected, and there are not too many players from Indian context, and we want to actually occupy that space and then build our global footprint. So we have very ambitious plans, and we are steadily going towards that.
Let's talk about the size of the opportunity versus what kind of pie of that are you eyeing in the next 3 to 4 years, at least in terms of ambition and aspiration. Can you talk to us, if you keep on adding new features, new solutions, how big is the market in India, and how much can we aim at garnering over the next 2-3 years?
Yeah. So, Ajay, in the last couple of years, we have doubled our serviceable operatable market, right? And by introducing new solutions, new products, and building new technology, we are moving from 1,000 crore SOM to almost 2,000 crore SOM already. And our ambition is that by introducing new solutions in Horizon 2 and Horizon 3, we would be in the next 2 years having a serviceable operatable market of around 4,000 to 5,000 crores. So that's really how we are progressing. And this is just to focus on the the business in India. And as we start expanding in the near future in global markets, that SOM obviously will exponentially grow.
Understand how much of that actually, in all probability, translates to revenues. What kind of margins are we likely to enjoy in the next 2-3 years when we start adding more solutions and features in our offerings?
Yeah, sure. So there are a couple of things I wanted to highlight here. One is, right now we are in a heavy investment mode. Okay, a lot of our core technologies are highly, highly profitable, but we are actually reinvesting that profit into our new technologies so that we are able to build a secure future in years to come. And so that is one thing which is happening. So you would find that while we are always assuring our stakeholders that we are going to be profitable, but our focus is on growth and investments. But that's going to be for the next maybe 2 to 3 years horizon. But as we start delivering on our ambition and realizing our ambition of the growth trajectory, you will start seeing that the gap between the revenue rate of growth and the cost will actually start increasing, and our EBITDAs will start looking far better than what they are today. So that's really how we are looking at it, because we have the second part that I wanted to talk about is that we have a good control over our costs. You're seeing that how we are maintaining and managing our cost on a quarter-on-quarter basis, and we will always be prudent in terms of how we are investing and how we are, more importantly, productive in terms of how we build our solutions. So productivity, cost prudence, and investments are going to be important factor of the balance that we want to have in the short term. But as I said, the rate of growth as we anticipate in our revenues will be far higher than the rate of growth of our cost.
So you are emphasizing quite a lot on growth as a priority. What kind of growth can you share with us? Is it 30-40% or a higher kind of growth can shareholders expect over the next 3-4 years?
We're definitely expected to grow far higher than the industry. We have that potential to get to the numbers that you're talking about. But it will happen in a very calibrated manner, right? It will not be an overnight kind of a success. You have to be there on a quarter-on-quarter basis. You have to keep on doing the right stuff. You have to execute on all the strategies that we have. We have to pivot to the enterprise security model. We have to change, have the right culture. We have to have the right mindset. We have to have the right branding. So all of that is work in progress, right? And you will start seeing gradual, improvement on a quarter-on-quarter basis. Our focus is always, whatever we are doing, we are always looking at long term, right? We are not focused on short-term effects. And all the things that we are doing in our strategies that I talked about are more focused on how we are going to sow the seeds for our long-term success.
Right, Vishal, we'll track that closely. Thanks very much for your time and good luck for coming quarters.
Hey, thank you so much, Ajay. Nice talking to you.
Nice talking. All right, Vishal, I'll stay in touch. Thank you.
Welcome back and keep it going with all the stocks that have been buzzing in trade. And Sneha, the next one you've picked out for us in terms from the technical point of view is TechM. So what's the word coming in on TechM? What is the target that we're keeping out of here?
If you look at the chart structure recently, this counter has given a very strong up move. From 1230, this counter has been moving higher. It is trading now around 1550 odd zone. See, if you look at the chart structure, after a strong up move, there was a consolidation, and today we have seen some buying interest along with unwinding in call options. So I believe we may see an extension of this move. One can keep a strict stop loss of around, say, 1510 and go long in this counter. We can expect an up move at least towards 1600, 1620 odd levels.
Okay, keeping an eye on those levels for TechM. Let's move on and talk about RR Kabel. That's the stock that's in focus today. They reported their numbers yesterday. Revenue was in line, but a miss that came in from the margin front, and that is why we're seeing that there was a pressure in the stock price in the morning trade, almost down 1%, but recovered from that point, now trading with cuts of 0.2%. Revenues saw a growth of 13% on a year-on-year basis. EBITDA margin came in at 5.3% versus 7.1%, so a contraction in terms of the EBITDA margin by 180 basis points. and that was the miss that came in on that front. Other than that, the management said they want to focus in terms of the margins amidst volatile copper prices. Outlook remains strong for the company going forward, and government capex is something that they are focusing on as well. But we also spoke to the management of the company today in terms of their guidance going forward, specifically on the margin front. Listen in to what Rajesh Jain, the CFO of the company, had to say.
On margins, yes, we have seen some decline, which has come down by almost 1.6% in the wires EBIT level. And the main reason being we have seen a huge volatility in our raw material prices, particularly in the month of June, and also in exports due to some Red Sea crisis, our shipment got delayed. So that is one of reason for now. Going forward, we seems ki what we have predicted at the beginning of the year that we could achieve volume growth of in the range of 20% and margin improvement to another maybe 60 to 80 bips. So we are online. It seems we will achieve that.
From one earnings to another, Mahindra reported their numbers a short while ago. A beat on the margins. The management is talking.
In good progress in this business. International markets have moderated, but due to strong execution, margins gone up 100 basis points here, which again in an industry like farm is a pretty tough act, and a lot of kudos to the team to drive that margin expansion. Mahindra Finance, in addition to the asset quality and growth, technology is a key part of our turnaround, and we have 100% of branches now under a central processing system with a much better tech system. A lot of work has been done on technology. We aim to be the best in class in the industry, and we are well on our way. That's the remaining year and a half or so of turnaround that Mahindra Finance will undergo, is largely from a tech standpoint. And here you see almost 500 crores of profit for the quarter for Mahindra Finance. This is a pretty remarkable number. We're at 497 right now, just shy of that 500 crore number. Tech Mahindra, the new organization's focused on service delivery. The demand signals are still mixed. You see good numbers from a previous year comparison standpoint, but again, to be very transparent, previous year was a low point, and therefore we look more at are we on track with the turnaround plan as compared to the numbers of the previous year.